Let's backtest our trading strategy using just two numbers. So here we are at ValueGlance.com, and we're taking a look at the S&P 500 shown here in blue compared to a simple strategy. This is a high quality stock strategy. And we can see here the two parameters are market cap and ROIC. So we're just looking for companies here that are above 50 million in market cap, ruling out the very small companies where the data is less reliable, more volatile, and looking at high ROIC, in this case above 20%. And what we do with the backtest is go back in time, construct portfolios by using these filters, and then holding them, in this case quarterly, or we can also look at the results for yearly, and constructing that portfolio for 30 years to see how it grows. And we see, looking at the final result here, this is the growth of $1 turned into nearly $300. So that's a over 17% annualized return. Compared to the S&P 500 over that time, the index grew over 8%. We can look at other strategies here, the cash machine strategy, looking at free cash flow yield, value creation strategy using the value creation yield. So these are different sample strategies you can check out. Let's see how to build our own. So we can go to the sidebar here, look at Stock Screener. And so we're going to use this to build our strategy using two numbers, three numbers, whatever you're interested in. We can come over here to the filters, look at these different parameters that we can filter by. So in this case, let's take a look at ROIC and free cash flow yield. So ROIC is a key quality metric. We can look for high quality businesses. And we can see here, we can take market cap again using that filter, let's say above 0.1 billion. So again, 100 million. ROIC above 20%. We can adjust this range here. Free cash flow yield above 10%. So we click apply. See 43 companies here that satisfy those metrics. Bristol Myers Squibb, so healthcare, BHP, basic materials, healthcare, technology, communications, so different sectors here of different ranges, but we can see because we've screened out by these parameters, we get high quality and high free cash flow yield. And we can go ahead and save this. So we save that screener, and we can go to the backtester. And to create our own strategy, we click Create New Backtest. We go to Customize Screener. So this is the one that we had just saved. We could choose annually or quarterly. So again, you want to trade once a year. Use the annual. Quarterly, you could trade once every quarter, 4 times a year. Let's look at some of the latest data here, going from 1990 to 2025 Q3. So we can call this Test 1. And so this allows us to get the long-term perspective. So let's take a look at one that we already ran before. This is the value creation yield. We could see how it did. So the S&P 500 here, about 8%, and the value creation yield strategy over 20%. So that's shown in brown here versus the S&P 500 in blue. And we could see very clearly on a log scale how this crushes the market. If we click on any one of these quarters, we can see how individual companies did and actually look at the pie, see what we would have traded, see the returns, the different weights. And so this is really a time machine to go through the database of historical stocks and see the backtest, see what you would have actually done, how the strategy would have actually performed. Go down here and see the different filters that we chose. We can zoom in, zoom out, see what happened in detail. The point here is to illustrate how a strategy works over the long term. So if you want to create your own trading strategy, go to ValueGlance.com, check out the backtesting feature, and see if you beat the market.